Henry, your thoughts going into this opening print?
Well, obviously it's not ideal for anybody. I think for the company, though, they got a lot of money. They needed cash, so they're in a much better place than they would be if, say, the trade talks went terribly, the market crashed, and they were shut out. And this is very recoverable. There are many great companies where the IPO broke the price very quickly. Amazon, Facebook, famously. In the long term, it didn't matter at all. So it's not what anybody would have wanted. You'd want to pop to a 10 to 20% up, something like that. But it looks like it was opened about where the equilibrium was. The stock is not being wildly volatile. So overall, I think even though they can't say it, Uber management is probably pleased that they got the deal done. They needed the cash.
Yeah, Henry, trading with a 42 handle on this Uber stock right now. In terms of how much of this, and we've been having this debate all morning, but how much this is the broader market and all the uncertainty around trade talks and the like, versus the fact that Uber has a lot of challenges in front of it and is not a profitable company for the foreseeable future. Where do you land in this debate?
Well, I think that's why they needed the cash. They're burning almost $1 billion a quarter. They were down to 6. They needed more. So it's very good that they got the deal done. I think what was startling to a lot of people in looking at the IPO prospectus is in the last few quarters, the fundamentals really have cooled down. Their overall gross revenue is going up, but their actual net revenue is flatlined, so they need to work through that. There's huge competitive pressure. So there are a lot of things going on in the business that I think probably were a bucket of cold water in the face of a lot of folks who would ordinarily have been tremendously excited. The long-term opportunity is still there. As Roger McNamee was saying earlier, this is a great service. People love it. There will be a big surviving company here, and there does seem to be a lot more market opportunity. But I just think we're in a market where price does matter, and this was a lot of bad news on the trade issue this morning, and so they're in a tough market. But again, a good company will recover and get through this.
Henry, how big a bucket of cold water is this, and how cold for all the other startups out there and their valuations?
It's obviously it'll be a bucket of cold water on the IPO market, but I think as a lot of guests have been saying this morning, great companies are still going to be able to go public. Maybe the price at the IPO will be less. This will certainly have a lot of folks who are looking at IPOs be a lot more careful about the price that they bid going forward, but good deals should still be able to get done unless the broader market.
See, that's the thing. Uber was careful, Henry. You could argue they were pretty careful. Not only, I mean, people were expecting a market cap sum of around $120 billion from this thing. It's well off of that, and they priced at the low end of the range, and yet, look at the chart. I mean, priced at 45, now it's at 42.60 maybe.
Yep. It's not, again, we're opening into a scary, broader market going into a weekend. It's not ideal. But it's also, this is a huge amount of stock. Price becomes a much bigger issue when you've got this much liquidity. We seem to have stabilized here around 41, 42. That's good. So we open in that. And if you're a long-term investor, not a trader looking for a flip, where obviously this stings, but if you're a longer-term investor, you know, it's more attractive than it was last night if you believe in the fundamentals. And so this is actually an opportunity to fill out a position to a size that you want at a better price.